Hello everyone, welcome to the OptionFlow channel. I'm Lou, OptionFlow founder. Disclaimer as usual, I'm not here to tell you how to invest your money, to suggest you what to do with your money. It's only my personal journey and my experience. So this is my vlog. I share my own ideas, my own way of thinking, what I do with my money, and I don't tell you what to do with yours. So, disclaimer as usual, this is only my experience. Today, we'll delve into the foundational concepts of the option flow method, focusing on how it allows you to build your own insurance company in the world of finance. Okay, so I'm going to explain what I teach to my investors. I am a high ticket one-to-one mentor, and I teach investors how to create their own stream of income with their money, how to invest in money with options investing. And I only teach to few selected investors because I'm a businessman, I'm an investor, so I like to help people one-to-one, but time is limited, so just a few investors every month. So I'm going to explain what I do with my own money and what I teach to my few selected investors. So imagine being in control of your financial destiny, much like running your own insurance company. With OptionFlow, with my method I teach, that's exactly what you can do. Okay, so you don't need to open LLC, a company. Okay, just the method I use with my money. Okay, so I'm going to explain you my philosophy, why I do that, and what you can do with your money. Okay, so imagine an insurance company. You become the insurer, so selling insurance premiums in the form of option contracts to individuals or entities of your choice. Just like an insurance company, you can collect premiums to insure people or entities like banks, funds, and you can decide what are these criteria to insure these people or these entities. Okay, for example, think like a car insurance. Okay, you pay a premium to insure your car. This contract is for 1 year, okay, 6 months, 1 year. And if nothing happens, you pay the premiums to the insurance company. The insurance company collect your premiums, okay. If nothing happens, insurance company keeps your money. You pay, but you are happy to pay, okay, because you sleep well. Because if something happens, insurance would pay you, okay, for damages, etc. Okay, this is the same principles. Okay, as an insurance company, you can decide who insure. For example, if imagine there is an 18 years old with a sports car, I imagine you don't want to insure him or her. Why? Because there is too much risk. Okay, you can collect higher premium, okay, because there is a high risk, okay, but there is a probability something happens that it's higher and you have to pay more in this case. So of course I teach step by step what are these specific criteria to decide, okay, I want to insure this, okay, I don't want to insure that. Okay, I teach and I use these specific criteria, of course, with my OptionFlow method. And I would choose, for example, 70 years old retired man or woman who uses or drives his or her own car twice a week to go to the grocery store. Okay, premiums collected are much lower, agree, but risk is lower too. Okay, so I look for people to insure with low risk to collect premiums. Okay, I don't look for higher premiums with high risk, but lower premiums with low risk. So a probability of profit, like every insurance company does, based on statistics. They see, for example, that 70 years old people who drives twice a week a car to go to the grocery store, 95% of the time of the people, nothing happens, so they pay for the 5%. Okay, something happens sometimes. Even the 70 years old who with a car, something could happen. Okay, but they know that the 95%, it's just an example, 95, 97, 98% of the time they collect premiums without paying anything. Okay, so that's why they can insure people collecting even low premiums, because everything is based on statistics. With OptionFlow method, we do exactly the same thing. Okay, so what exactly are these insurance premiums in the world of options? Think them as the price paid by option buyers to secure protection against adverse market movements. Okay, by selling option contracts, you are essentially collecting these premiums on a regular basis, okay, much like receiving monthly insurance payments. Okay, for those who knows options, if you are asking yourself if it's something like selling options naked, no, it's not. Okay, so if you don't know what that is, we will see later, it's not important. So I want low risk, okay, low premiums but low risk, okay, based on statistics. And one of the most empowering aspects of the option flow method is the power of choice. Okay, because just like a traditional insurance company, you have the freedom to select who you want to insure. You can carefully choose specifics underlyings, stocks, ETFs, indices, to sell option contracts, okay, allowing you to tailor your strategy to your risk tolerance and financial goals. Of course, I teach exactly what these criteria are, okay, because you have all the checklist, all the green lights, one, green light two, green light three, green light four, green light five, okay. There are green lights, probability of profit, it's more than 80, 90%. Okay, so okay, we can make contracts for this insurance premium. Okay, I can collect premium. So I teach exactly the specific criteria. So option flow method provides a structured approach to managing risk effectively. Have you ever listened to an insurance company who bankrupted? A bankrupt insurance company? No. Why not? Because based on statistics, they sell premiums. Okay, they pay sometimes. Okay, sometimes happens, but the statistics, probability of profit, it's on their side. So that's why, as the insurer, there may be times when you need to compensate option buyers. Okay, in the event of adverse market movements. However, following the principle of my option flow method, you can mitigate these risks and protect your financial interests. Let's make an example. Imagine selling options, okay? We have protection. We have protection even selling our option contracts, okay? Three kind of protections, okay? And imagine you are selling option contracts on a blue chip stock, okay? Even if the market experiences a downturn, you can still generate income from the premiums collected, providing a steady income stream regardless of market conditions. Okay, because as an option seller, you don't need to check every day what the insured do. Okay, just only if the condition happens, okay, you have to pay. Only if the car has some damages caused by the driver, by the insured, okay, you as an insurer, you have to pay. But you don't need to check every day what he does or what she does with the car. Okay, so you collect your premiums and you let the method, the probability of profit, and the time do the rest. Okay, so option flow method offers numerous benefits for those seeking financial independence, passive income, and a new stream of income. From providing a reliable income stream to mitigation risk, this strategic approach to options trading, options investing, can help you achieve your long-term financial goals. Okay, because I wanted that. I want a method for the long run and reliable, stable, okay, with low risk. Consider that my drawdown is maximum 5%, 5-6%. Okay, so it means very, very low risk. You can collect richer premiums. Yes, you can insure the 20 years old with a sport car. You can collect much more, but your risk to pay because something happens with that boy, that girl driving a sport car will be much more higher. So this is my vision for the long run. A stable, collect premiums every month for the long run with low risk to create a stream of income, to improve my investments and add a stream of income, to have the freedom to choose. Okay, if you have your own business, if you are self-employed, if you work for a big company, but you want a freedom to choose something else, you want to retire earlier, you want to change your job, you want more time for yourself, for your family, having a stream of income, not depending from your job, your business, but let your money works like an insurer, like an insurance company. You can install your insurance company in your broker account, in your bank account. This lets you earn a passive income, another stream of income. When you learn what to do, just a few hours a month, just a couple of hours a week. So you have time for yourself, for your family, for do what you love, and you can retire earlier. You can change your job. You can work less, for example, if you are self-employed and have more free time. So the freedom to choose, for me, it's the most important thing. Okay, so we have success stories from individuals who have embraced the OptionFlow method and they've changed the future. They have more choices, they have more freedom. So this is what works for me and what worked for me, and why I decided to teach my method one-to-one, because I made every mistake possible. I lost money trying experiments, setting up my method. Then I created a stable income and people started to ask me what I did. So I started to teach one-on-one. But why not a course and a one-on-one? Because yeah, I made courses, but it's only theory. And what I hate, yes, you can learn something new, okay, but I needed something practical. And I didn't have that. You can learn what to do in theory. Yes, it's very good, but what to do and you are alone in your room with your laptop? Okay, what I have to do? What now? And then, meow, I didn't know what to do. So that's why I would prefer working with few people one-on-one. I teach people who really wants to learn how to do, even if you don't know quite anything about options investing. You need only the basics. Just what is an option, what is a call, a put, how they work. Okay, that's all. So even for beginners, I teach one-on-one. So I have two different mentorship programs. I teach one-on-one people how to create their own insurance company. You can invest in the market for the following years, decades. You can teach your own children, your son, your daughter, what to do. And the next generation could do that. So your insurance company could live over you. So these are powerful information. You have it forever and you apply. You can do that month after month, year after year, for years, for decades. Okay, so if you want to know how to do that, how to create your own insurance company, a step-by-step method with specific criteria, working one-on-one with me, below this video there is a calendar link. You can book a free consultation call so we can see together in your specific situation if this could be for you or not. You don't want to lose time, me neither. In a couple of minutes, I can tell you, okay, it's not for you. I work only with few selected investors. I don't want to work with a lot of investors because I have my business. I'm an investor. I like to travel. I'm a world traveler, so I like to do sport, and I like to work with few selected investors. So if you want to know if this could be for you, click on the link below this video, Calendly link, and book a free consultation call together. See you in the next video, and good luck.